Hi, this is Brian Stevens with Legacy Venture Group, and this is another in our series on helping business owners prepare for the future. Because as much as we love our businesses, even if we wanted to, we cannot run them forever. So we have different options, but being prepared for those options is really important. And here's one of the reasons why. If you type in the words "why businesses don't sell," you're going to see some startling information. And this is really having a lot to do with business owners not fully understanding what it's like to sell a business or transition a business, and as a result, ends up not selling the business at all. And that can be a disaster if one is pushed up to a situation where health or urgency or other family matters force or push a lot of pressure for a business owner to get out of the business. So check out the information. You can type in "why businesses don't sell into the marketplace," but we want everybody to make the successful transition when they're ready for all the right reasons. When you leave and you leave successfully, you'll have more time with family. Maybe even have grandkids are waiting for you to enjoy more time with. You might want to travel the country or travel the world. You might want to just have more time on your hands and not worry in your business. You might even want to grow wealth. And by the way, I've left a QR code up there on the corner. Maybe you just like to learn more right away, so you can snap a shot on that right away if you want, and you'll have a chance in a few moments as well. I'm going to keep this really simple, but today we'll just do like a 5-minute real quick story on one aspect of understanding the value and preparing for the value of your business. And one of the key elements in understanding the value and determining value is to start with determining how much money you've made in your business. So we joked in the very first slide that says, "Will the real net earnings please stand up?" And we believe that it's safe to say that almost every business has two numbers when it comes to earnings: the tax numbers and the real numbers. So this is just to get you beginning to think about the process. It's not to be very deep. It's not very complex right now. But on your taxes, you know that your accountant, if you're using an accountant or if you're doing them yourself, what you are likely going to experience is this lowest, the minimal number, so that we don't have to pay a lot of taxes. And so we write off amortization and depreciation and interest, which are all totally allowable. And sometimes people write off some money they paid to a spouse, or maybe they took a fancy trip, but they looked at similar businesses while they were on the trip and they wrote it off as a business trip. Now, I'm not here to explain or share or defend or condemn anybody. It's just the facts of the facts that there are a lot of things that go into minimizing the number, the bottom line of our tax returns and on our profit and loss statements that really don't need to be there in many cases. And as a result, there's a lot more profit in the business, but it doesn't always show up on the bottom line of your taxes. In fact, if you were to work with an intermediary, or you do this yourself, or you're going to get a valuation, one of the key things is to closely look at the numbers on the profit and loss statement primarily, but also on the balance sheet, and we'll go over that in just a second. But on the profit and loss statements, you might have this thing: amortization, depreciation, interest, and add those things back. So, if there's $50,000 in profit on your tax returns, another $50,000 of amortization, depreciation, interest, you'd add that, and now you should be showing $100,000. But maybe you're also paying the spouse that you love, who used to long ago work in the business in a land far away, but now doesn't, but enjoys having that money, and maybe they're getting another $50,000. So now you add another $50,000 because a new owner, if they were looking to buy the business, would not have to give your spouse $50,000 for not working in the business. You go through the whole process and you start to readjust all the financial numbers so that it really reflects what a working owner that really wanted to pull as much cash out of the business could possibly do so following your footsteps. I also mentioned there's some items on the balance statement, but probably the key one is that the government, the IRS, allows depreciation. So maybe you bought a piece of furniture or a fixture that had a 5-year shelf life, and so maybe it was worth $100,000 year 1, year 2, year 3, year 4, year 5, and then there's all these write-offs, and you get down to zero. So now you're showing furniture, fixing, and equipment. There's zero in a category that one time you spent were $100,000. Well, the book value might be zero, but on the other hand, if you were to sell that item, it might be worth $40,000 or something like that. So there's the real market value. So that adjustment is made to the profit loss statement. Going back to the income statement and the tax returns, that's the type of number that people look at for the large part, and it's important to understand that this number is the type of number that's going to help you with your valuation. Most likely, you're going to be asked to do that over the last 3 or 5 years, what they call normalization, which is what I'm beginning to converse about. And I'm also sharing that there's the tax number, which is not really the number most people are going to make a decision on, but the real number. And getting to that point is a key element. Look, I'm trying to keep this really short. Please reach out today if you would like to have more information. You can check out the QR code and get a copy of our business seller book. And again, I'm trying to keep this short, so thank you for your patience. And if it's too quick, you can let me know. If you have other questions, I'd love to hear from you as well. Again, this is Brian Stevens at Legacy Venture Group, and our website is BuyBizUSA.com. Take care. Bye-bye.